Happy holidays, and I still don't know what the fixings are for the silver, but in reality, it's all depends on when you buy and when you sell that matters. For example, if you were to buy everything that you own here and you sold it all here, then there's your buy price, there's your sell price. You at one point would have been up nicely here and then it fell. And you would have been back to break even. That doesn't matter. It's your buy price versus your sell price. So unless you're looking to make a transaction now, pretty much irregardless, we'll wait till Sunday and see what the message of the market states at that point. Alrighty, so pretty much a hit. Previous resistance. We'll see if it's current one. It's all nominal and everything, so I don't know how much you'd want to play into it. After all, 50 back in here is not the same as 50 today, but the market's going much higher. Shorts are getting crushed as this current quarterly candle is only like 3 weeks into it. This is every one of these beforehand represents 3 months. Look, and the size of them beforehand. A lot of these ones are tiny. This is a decent sized move thus far. We still have the month of May as well as the month of June. So I find that very interesting. And I was just playing around with this little chart in here, and it's the inflation adjusted. I think what's important to know here, you barely make a lower low, and this sudden move in here was almost like it was the breakout reversal. As long as it really gets above here, it changes the downtrend to at least a neutral range. This trend line, obviously, I think that I don't know. I don't know how much you want to put into a 600-year chart this way, but as far as the numbers are concerned, it to me is showing good signs of it holding. I think holding 25 here would be the significant one, but that's of course significantly long term. Whereas if we uh, if we see what a normal market should have been like after this big move higher, it really should have corrected for a little bit and then maybe come back to make new highs. It seems pretty clear to me if you look at almost any item, any index, what was the lowest price back in the 70s and what was the highest price? And then find out what the lowest price this decade is. So in this case, you'd have a difference of about 350 to a buck and a quarter. So that's about 3 times the difference higher. Where, for example, the Dow, the lowest price this decade was 6,500. The lowest price back in the 70s, I think, was like 600. So that's about a 10 times difference. And the highest the Dow had back in this period was like 1,000. Now the highest is like 14,000. There's a 14 times difference. It doesn't make sense to be under this value here when you adjust it all for inflation. That's pretty much the basis I think I see within that one anyway. Let's now move on, and we'll move on to the weekly. This this has been the theme. The theme is breaking resistance to the upside. It's been going on a lot, especially over the last week. I'm not gonna cover the short term in here, but it's been resilient. And the key word about resilient, and I've been using that word a lot, is resilient means how able you're able or how well you're able to recoup yourself from like falling down, if you will. And I use that as the manipulation, how fast it's been able to do it. So it's resilient up to about 200 or so. As far as the weekly chart long, this this next trend line here brings us up to about, as we can see on here, 60 or so. 60, 65. So if you have that big sudden move to 78, this trend line will be that of violated. If we draw a parallel line, something like this, We can see by connecting the support levels from 2005, 2006 that it's gotten above that area really nice. And it's in the middle part of this range, could very easily go to the top part. But just because you're at an area where you're supposed to find resistance doesn't mean that you will. And what it usually means is if you don't, it's going to break through the next one fairly convincingly. Finally, like I said, I don't know what the current price is on the daily time frame, but if Friday was a trading day, it was an up day. 1, 2, 3, 4, 5, 6, 7, 8 straight up days in a row. There was 8 straight up days in here, so that's 16 of 18 consecutive days. We're still below the 50 mark. So at any time, these things that we were expecting to happen can pretty much happen. It can be Monday, it can be next week, next month, but on any given time frame, any given point, the anything like a COMEX failure, anything that's getting within the SLV, I don't know, just with information within that sort of deal can really spark a lot of high movements. And I don't know what went down on Friday, but I'll just wait till the open on Sunday, where I would expect the market to gap around 47 and a quarter, and then have a lot of major moves, higher volatility that we've been accustomed to. And I think at the same point, the the largest amount of it, which is really the breaks above into triple digit territory, is still a little ways away, but I don't know how long a little ways actually is.